Welcome to today's webinar, Builder's Risk Insurance Explained, what every contractor, developer, and property owner should know. Construction projects involve significant investments, time, labor, materials, and capital. Yet, many stakeholders spend far more time discussing liability insurance than protecting the actual project itself. What happens if materials are stolen? What happens if a fire damages a partially completed building? What happens if a windstorm causes major property damage? These are the types of risks Builder's Risk Insurance is designed to address. Today we'll discuss what Builder's Risk Insurance is, what it covers, common exclusions, claim scenarios, risk management strategies every project stakeholder should understand. Let's get started. What is Builder's Risk Insurance? A specialized property insurance policy designed to protect buildings and structures during construction. Unlike general liability insurance, it protects the project itself. Think of it as property insurance for construction before completion. Coverage typically remains in place until construction is completed or occupied. Who needs builder's risk insurance? Property owners, developers, general contractors, construction managers, EPC contractors, lenders, joint ventures. The answer often depends on contractual requirements and project structure. One of the first questions: who is responsible for obtaining builder's risk coverage? Failing to answer early can cause confusion after a loss occurs. What does builder's risk insurance typically cover? Physical damage to covered property from covered causes of loss. Examples: fire, theft, vandalism, wind and storm damage, material damage during construction. Fire. Construction site fires can cause catastrophic damage. A partially completed structure may suffer hundreds of thousands or even millions in losses. Theft. Materials, copper wiring, HVAC equipment, tools, and fixtures are common theft targets. Theft remains one of the most frequent builder's risk claims. Vandalism and wind damage. Unsecured sites may be vulnerable to vandalism. Windstorms can damage structures, roofing, scaffolding, and materials. Material damage during construction. Damage occurring while materials are being installed may be covered, depending on policy terms. What builder's risk insurance does not cover? Understanding exclusions is essential. Builder's risk insurance does not cover everything. Common exclusions: general liability claims, third-party bodily injury, property damage, professional liability exposures, design engineering errors, employee injuries, typically workers' comp, pollution liability, environmental releases, cyber risks, technology, cyber losses. Understanding coverage gaps is essential for developing a comprehensive risk management strategy. Real-world claim scenario: a contractor was building a commercial office complex, 70% complete. A fire started after unauthorized entry and caused extensive damage. Losses included structural damage, material losses, debris removal, significant delays. Without builder's risk insurance, the financial impact could have been devastating. With coverage, repairs were funded and construction continued. The incident created challenges, but the project was not financially crippled. This example demonstrates why builder's risk insurance is often a critical component of project protection. Soft costs and delay exposures. Losses may extend beyond physical repairs. Examples: interest expenses, architectural engineering fees, permit and legal expenses, financing costs. Some builder's risk policies may cover certain soft costs. Project delays can have substantial financial consequences. Contractors and owners should check if delay-related exposures are addressed in their insurance. Common mistakes contractors make. Mistake number 1: assuming someone else purchased coverage. Multiple parties involved? Never assume another party obtained builder's risk, verify it. Mistake number 2: failing to review contract requirements. Contracts often specify who purchases coverage, required limits, deductibles, covered parties. Always review contractual obligations carefully. Mistake number 3: underestimating project values. Coverage limits should match project values. Insufficient limits ill major problems following a loss. Mistake number 4: ignoring security controls. Risk management matters. Good site security helps reduce theft, vandalism, unauthorized access. Insurance should support risk management, not replace it. Builder's risk insurance checklist. Who is responsible for purchasing coverage? Are all required parties included? Does coverage reflect project values? Are materials stored off-site covered? Are soft costs, delay exposures addressed? Have contractual requirements been reviewed? Are security controls in place? Are major exclusions understood? Does the project have a comprehensive risk management plan? Key takeaways: builder's risk insurance protects construction projects from physical loss and damage during construction. Covers risks like fire, theft, vandalism, wind property damage. It's just one component of construction risk management. Successful projects combine strong contracts, effective risk management, appropriate insurance coverage, contractor oversight, site security, claims prevention practices. The strongest teams don't wait until a loss occurs to understand their coverage. They review their risks proactively. Thank you for joining today's webinar, www.montridgeinsurance.com. For more resources on risk management, insurance contracts, and claims prevention, visit. Until next time, stay informed, protect your projects, and manage risk.